All right, everybody, welcome here. This is Crypto Voices episode 144, but it is indeed our first video recording ever, first video podcast ever. Matthew Mežinskis here, your host here from Eastern Europe, joined by my buddy from Halo Privacy, Alec Harris from the US. Alec, how are you, man? Welcome.
Good. So first video. This is when we see a precipitous drop in interest, right? Because people were assuming like a sort of svelte and stylish looking hosting cohort.
I was thinking you were going to talk about the fact that people are just driving in their cars and they're like video episode, but just turn it off, switch over to Joe Rogan or something.
Uh,
But yeah, as well, probably you're going to be
well, I
left out.
mean, he has a radio face too.
That's true. That's true.
So if he can do it, we can.
That's true. But I've been doing these daily chart commentaries on a lot of trend lines at the moment: gold, silver, Bitcoin, a little bit of the U.S. dollar, a lot of macro stuff, and trend line analysis each day. And I hope people have been enjoying that. But yeah, we're if you're following this on Spotify, YouTube, or Rumble, on those channels, obviously you'll be able to see the video. But even if you're just following on Apple Podcasts or Stitcher or somewhere else, you can still, of course, hear the audio, but the video isn't available there. So that's how we're going to do it. That's how we're going to continue on here with these episodes. And yeah, yeah. So that's what we're going to do. We thought that today we'd begin by talking about the government debt. Very exciting topic, because as I
Mm.
understand, it's nice to be out of the U.S. Sometimes and not follow cable news and listen to all this stuff. But as I understand, Alec, you guys are about to hit your debt limit once again. And so I thought we'd run a long scale chart here on government debt. So I don't know. Have you been hearing a lot about it back stateside?
Even though I'm trying not to hear anything about it, but it's hard to miss it. By the way, what's this you guys thing?
Yeah, I don't know. I was just trying to be different there. I'm
uh,
very much still a citizen.
you've been living
So
in Europe too long.
yeah.
Yeah, I mean, listen, um, it's a great item for the politicians to play chicken over, and this is a divided Congress, and so the timing is perfect to have a last minute showdown where both sides of the crazies, really ask for the weirdest stuff and try to hold the debt hostage. So I think it gets a lot worse before it gets better.
Yeah. Yeah, it seems that way. And I remember like 10 years ago, Mitch McConnell used to say that we have to raise the debt limit because it's like paying off your credit card. And I believe he said the same thing this cycle around. And it's just a remarkable thing to say that people equate taking on more debt to paying off your credit card. Obviously, those are quite different things, but this is how they like to phrase it. And
But don't debts not matter?
don't what not what's that?
Doesn't like U.S. government debt? It doesn't matter, right? Isn't that the sort of Keynesian view of it?
Well, that's what I think we should talk about, because yeah, I try to take the long view with this. Obviously, when we have you know cable news hosts screaming at each other about something that nobody on the panel knows anything about, they don't know what the numbers really are. They don't know anything. Life still marches on. People still go out to dinner. People still go to work, and you know, kids grow up. So like, I don't. I'm definitely not like a doom and gloomer from that side, and I don't think it's good that the U.S. carries so much debt, and the U.S. certainly will not default on its debt, uh, at least in the a hard default sense, where basically they're not going to make a payment, like Russia has been doing, uh, and not making some euro payments or paying some payments only in rubles, and so on and so forth, and many other countries around the world which have actually defaulted on their debt. the dollar, obviously the strongest currency in the world, at the worst as far as the debt goes and the debt picture goes. I mean, they're still going to make their payments. They're just going to do it with more uh, inflated dollars, less valuable dollars. So that's generally my view, and that's generally, I think, what will continue to happen here. So, um, yeah.
So, but let me ask you: is the total outstanding debt the number to look at, or is it the debt to GDP? Right. So, like, which of those matters more?
Probably debt to GDP from that perspective. But that's just one metric. In fact, that's a good segue. This is another important metric, which more relates to what I was talking about as far as the strength of the dollar and the strength of sort of the international outlook on the dollar. So we can get into this. This is, as it says on the chart, the central bank ownership of the government. So for every dollar that the Treasury issues, the Federal Reserve actually buys a, what has become a sizable portion back on the secondary market. And the way that they do that is just by printing money. And the money that they print goes into the banking system. And that's how money is created. And loans are further extended on top of that. So you remember all my monetary base updates and stuff that I've been doing. The monetary base is one side of the balance sheet. That's the liability. That's the money they create. But the asset side of the Federal Reserve's balance sheet, or any central bank's balance sheet, is actually government securities, government treasuries. So the money that they print is on the liability side, and the actual assets that they own is on the asset side, and those are the treasuries. And that's by and far and away the largest portion, the largest asset that any central bank will own is government debt. Um, so that's actually what this is showing here. I'll take this off. I'll even take this off. So this is
But
total. Sorry, you're gonna ask
no,
something?
sorry. Go ahead. Yeah, no, I had a question. I'll ask in a sec.
Yeah. So this is total debt throughout the last 100 years, roughly, since the Federal Reserve's been around. The U.S. has data, actually, interestingly, all the way back to the founding, since late 1700s, on debt. Um, in the early 1800s, they actually paid it off. Andrew Jackson, he wasn't. Again, people love all this old founder stuff. I mean, he wasn't exactly the most kind president to Native Americans and things like that. So it's just, there's no real angels in these debates and stuff. But nonetheless, you could draw a trend line here, and if we put it on log scale, which I'll do in a second, and see that it's gonna increase at a pretty fair clip each year, and it's exponential. So you see that it's very, very small at the early part of the 1900s, and then it rises pretty fast. It seems like it rises fast on the right, but any curve will look like this. It's exponential. It's basically non-existent on the left side on a linear scale, and it's pretty high on the right side. So you see the global financial crisis. I'll even zoom in. This is another very interesting uh, thing I find with the government debt is like do you remember after the global financial crisis how everybody was saying, okay, austerity, like the Tea Party movement, this is austerity. This is going to be the age of austerity. We're going to sequester government functions. I think that was the word they used, sequester.
Sequester, yeah.
Yeah, and we're not going to have we're just going to pull back on government spending, and we're not going to have a lot of worthless government spending and a lot of agencies and all the rest. If you actually look at the debt, so any government spending that goes throughout the year, if they can't cover it by taxes or other fees, it's a deficit. It's called a deficit. And the compounding, the accumulation of those deficits throughout all of the years will equal the debt. That's the rough, simple way to look at it. So every year there's a deficit because they never cover it in taxes, except for Clinton. And actually, let's show that first. This is where Clinton, for all of his great qualities, he actually did this one. So you can barely see it. So and notice how amazing this apparently was, right? That Clinton balanced the budget. All that meant was with the debt was like here. It was somewhere around 99, I think, that he did it, like the last year. It might have even gone into the Bush term. So like you can barely even see it. Let's zoom in more. It's like here,
Yeah. Wow.
5.7 trillion. This is in billions, so 5,700 billion. And then it went down to 5.685, something like that was the amazing balancing of the budget from Clinton. All that meant was that he wasn't increasing the debt.
Yeah.
It doesn't mean like, you know, he's eliminating the debt. It doesn't mean that he's drastically reducing, the interest payments that we do by the federal government. It's just like a very, very small lack of increase, which typically happens. So that's kind of the first thing I wanted to say. But then if you go here, like all during this time, remember post financial crisis, they were. It just shows you like how again the talking heads and people are so far from reality. It was like sequester, sequester, uh, austerity, austerity, tea party, tea party. But like you look what happened. I mean, the government debt on the eve of Obama's presidency was 10.2 trillion. That's what Bush gave us. And then by the time Obama left and Trump came in, sorry, Obama came in and yeah, oh wait, that's right. By the time he left,
Mm-hmm.
it's 19 trillion. So it's like doubled. It's doubled. So there's no, I mean,
Yeah.
it's just sort of, I don't know what's the right descriptive term to talk about like how people argue about this stuff. Like it's always increased. You could talk about the rate that it increases. You could talk about the value of the dollar. You can talk about all those things, but it always increases. And if they talk about like austerity, 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 like you just look at this, it's been up, it doubled during Obama's tenure. So that's one important big picture thing about the debt, I think.
Yeah. Well, neither party is the party of fiscal responsibility.
Yeah.
Uh, although they're just the party of different priorities for spending. That's that's what it comes down to.
Yes,
And
indeed.
then you see the pretty big. So that's the COVID uptick right there.
Yep.
That's probably the most dramatic
Yep.
shift up.
Big
Um,
stimulus.
and
Stimulus.
so yeah, that's wild. Because back in March 2020, right, they printed like a cool 2 trillion or
Mm-hmm.
so in a month, which was more than the entire GDP of Africa, as I recall. So in a month, right? We just threw that out there,
I don't know that actually.
and I
That's
assume
interesting. Yeah, 2 trillion.
that
The
yeah, I
U.S.
remember
is
that.
U.S.'s GDP is about 20 trillion. That's insane. If I didn't actually know that off the top of my head. 2 trillion is only the entire continent of Africa. Wow.
So that year or the prior year, right? The GDP of Africa was 1.8, and we printed like 1.9 in March of
Yeah.
2020.
So there you go. I mean,
So
as long as the value of the dollar holds, we can do whatever we want. This is what was called after the Nixon shock, the deficits without tears. So you can even see this from Vietnam. Actually, it's better if I put the other things on the chart, which I'll do in a second. But the debt does, even on a linear scale, you can see it clips up here after like
mhm.
Bretton Woods ended, gold ended. Uh, they called it deficits. How did they call it? I think it was deficits without tears. Basically, it's like you can just export your problems by printing more money, export your dollars to other countries. Other countries buy your debt. Federal Reserve buys your debt, and yeah, and
Hmm.
that indeed happens. So sorry, I think I cut you off though on another point.
Well, no, not really. But are there any other countries besides the U.S. that can pay their debt in their own currency?
Yeah, everybody does. Everybody does, and this is definitely one of the things
They
I've want.
can.
Yeah, yeah. I mean, uh, well, they have to first of all. Like the UK, everything is done in sterling in the United Kingdom. Everything is done in euros in the eurozone countries. Uh,
But they
that's
settle in that too, right?
yeah, yeah. The
Oh, okay.
Russia is not. They're trying to settle more in rubles now, where a lot of the contracts were in euros before, and of course the ruble has been crashing, but also they've been trying to remove it from the market and prop up the exchange rate and do all these other things. So that's something to keep an eye on with what they're doing with the war and everything. But
Hmm.
yeah, everybody
Wait,
settles in their own native currency.
so can I ask about the ruble? So in spite of the kind of like boon of their ability to export oil at a higher price, which is already starting to diminish, their the overall GDP of Russia was down since the war. Is that accurate?
It is. definitely down. Percentage-wise, I can't remember exactly, but it's
Right.
definitely down. Yeah, and many
But the
companies
narrative that
left.
this was
And
good for their economy is false.
well, they still have like $1 billion a day that they earn in oil and gas. So the resources, and this has always been the case with Russia, like even from the days of Hitler, Stalin, like when Hitler was trying to build up his economy, he was trading everything with Stalin to like iron ore to get all the minerals to build their tanks and stuff. Russia's just a resource rich country, so they're able to uh, to sustain a lot of their spending with those resources. So we're still spending, as
Yeah,
far
but
as I know, like $1 billion a day oil and gas to Russia.
365 billion a year is not much for a country, though. Like
Yeah, but
that's
their balance sheet is much smaller than that's about the size actually of their balance sheet, if I recall.
oh really?
I don't recall
Oh,
offhand, but it's you know, Bitcoin Bitcoin passed. It might be right at it right now, but again, the balance sheet in Russia is manipulated so much, and the ruble value is manipulated so much right now. Nobody wants rubles, but the Russian government is demanding that you pay in rubles and pay at a certain price, specifically with oil and gas. So it's just a very manipulated thing right now. But Bitcoin was above the value of the Russian monetary base, meaning basically the value of the Russian currency, which is the monetary base, which is basically the size of the balance sheet. Basically, it was more valuable uh, than the ruble all of 2021 and most of 2022. I'm not sure right now at this moment if it slipped behind, but I think it's right. It's probably right on it. It's probably somewhere around 300, 400 billion is the size of the Russian balance sheet, Russian ruble.
interesting.
Yeah.
Huh.
So yeah, everybody pays in their own native currency. Of course, like this is where power games come into play about who controls what currency. That all this talk about China and Russia wanting to move away from the dollar for resource export and resource trade. But have to see those things. But I definitely think it's always political theater, whatnot. We were actually just looking beforehand. I'll put this up on the screen because I think it's kind of interesting. This is the daily Treasury statement of the United States as of Wednesday, February 1st, the most recent one I could find. And if you go right here, debt subject to limit, February 1st, closing balance today, 31, this is in trillion, this is in millions, but 31.38 trillion statutory limit. If you look very closely, it's 25 million higher, the statutory limit. So
So you're
31.
saying we're good?
Yeah. And I'm sure that that's like, uh, we were joking before the show. I'm sure that's like completely accurate accounting that the Treasury does. But nonetheless, they're supposed to be transparent. They say they're transparent. So, yes, $25 million coverage until the debt limit needs to be raised. So, let's see. Let's see
I
what
wonder
happens
how
there.
many seconds of spending that is
Yeah, good question. There are definitely websites that track that.
to do that. Yeah.
Yeah, but
I wonder if it's a whole second. It might not be.
yeah, it, they're gonna need Bitcoin blocks soon. But anyway, if you look at the whole debt here, and then the interesting thing to actually see about the value of the dollar, this goes back to your question about GDP. We can look at GDP uh, on a later show, no doubt. But for here, we can look at how much the central bank, as I mentioned before, how many government securities they actually own, and that provides a much more interesting picture about the debt. And so that is here, signified by this nice little whale icon. So the black is basically the Federal Reserve's balance sheet, and so if we get to today, December, January, 31 trillion in debt, and they own 8 trillion, and that's actually down. As you know, they've been raising
Yeah.
rates. They've been trying to What that means, raising rates, is they need to spend less, they need to print less money. So that means that they're not buying treasuries anymore. They're selling them. They're putting them back into the market. They're letting banks take them. They're taking it off their balance sheet. So money actually is destroyed, and they've been trying to do that during this interest rate raising cycle. So you see, it was as much as basically 8.5 trillion here in May of last year, and that was the peak. And now it's down to about 8, and they're going to continue that for as long as they say that they need to. But then, of course, they run into the other problem of if the United States has too much debt and no one wants to buy the debt, and then you get into these other issues like the price of government bonds might spike too much. Maybe other investors. Remember, when a rate spikes, that means the price is falling. So other investors would want to and when I say other investors, I mean other countries might want to dump debt. They already are doing this. China's holding less debt. Japan is holding less debt of the United States. And, that's the game that you have to start playing. It's like, okay. And of course, then the value of the dollar itself comes into play here. Like that, this is the priority right now with the Fed, is they're trying to make the value of the dollar stabilize. But of course, they're doing that right in front of the fact that more debt needs to be purchased. And if the free market won't do that, they're going to be the ones in a non-free market way to have to step in and buy. And once they start to do that, yeah, maybe everybody else will be happy because then interest rates will go down. There'll be more borrowing, you get more bubbles, all the rest. So that's usually why people cheer when the central bank steps in to buy. That was called the Greenspan put back in the day, and then it was called the Bernanke put. Same thing. So like basically, that's what they're hoping eventually, but that's not the track that they're on right now. They're more worried about the state of the dollar. So that's why it's going just down a little bit. But then the interesting thing, I think, with this is if you put a percentage and you see where it's been. So this is where it's actually even more extreme than GDP. So debt to GDP actually was at its peak during World War II. The Federal Reserve was not nearly as involved during World War II. So now we have a percentage. We can see the differences. So the Federal Reserve was owned about 8% of government debt during World War II times. All right, that went up. At the start of World War II, it was 3%. Actually, it went down during this was real austerity, at least from the federal government's perspective. It was like 10% during the Great Depression, went down, 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 and then the start of World War II, they started to buy more relative. So it was like 3%, then it went up to 8%, 9% here. And then the Vietnam War is actually when the worst of it happened. That's when the gold standard ended. Bretton Woods ended, all the rest. Like France was calling in its gold. It wanted more gold. It didn't want dollars. But once they realized that they could end the gold standard and still have those deficits without tiers, as it's called, that's what happened. This was that great moderation period. This is when we, we're just having fun as kids. But this is when, this was the great moderation where everything seemed to be fine. Like, central bank owned less debt. The United States was able to issue more debt relatively, and the dollar was still strong relative to other currencies. The Soviet Union, of course, was a disaster, and that fell down and broke apart. So it was all good. And then, of course, until the global financial crisis where things switched again. So it's hard to tell, these long-term swings. People talk about fall, winter, spring, summer. I don't necessarily buy into those ideas, but I do think that you can certainly see the midterm trend of 20, 30 years. And we're definitely on a more difficult period here where basically the Federal Reserve has had to step in and buy more and more debt as time goes on. And so now they're in last year, March, April, May of 2022, they had 27% of actually more, 28% February 2022 of the entire United States government debt was owned by the Federal Reserve. So, and I can tell you that other countries, I don't know exactly what, we can review these as well once I get them on the chart, but other countries, Switzerland, the UK, generally Eurozone countries, Japan, this is a similar trend. Is the central banks, it's not it's not pension funds, it's just the central bank, the money printer that is buying up the asset that is the government debt security, which just doesn't exactly seem like a sustainable thing. So
What? But were there no buyers because the the ability to earn yield in the market was so great for so long? So like, why do you need a treasury bill?
yeah, I mean, obviously there are, I described gold and other things, but of course, like the stock market took off. Interest rates were at a peak here in 1980 because the dollar was weak here in 1980, and gold was strong in 1980. So the chairman of the Fed at the time, Paul Volcker, he took interest rates to 20%, which means that's the cheapest value of government bonds at that point when interest rates are at the highest. And then once interest rates start to come down, the bonds are getting more expensive. And everything was getting more expensive, stocks and bonds. So if an interest rate pays 20%, if a bond pays 20% in 1980 and in 1990 it pays 10%, the value of the bond is doubled. You've doubled your investment on top of getting interest. So you actually would get more if that was the actual math. So that's yeah. It's I don't know if it answered your question, but like basically there's a ton of different assets that everybody was owning, uh, but government debt seemed good enough. It was getting more expensive all through this period. Like all through this period, government bonds in the United States were getting more expensive. That's another thing I could put as yields here, but I think it's still
Mm.
just interesting to see what the Federal Reserve owned themselves. Basically, the Federal Reserve was owning less and less of government treasuries all the way up until the financial crisis. And
Yeah, and there's a big precipitous decline there. Like what happened in '08? Well, I guess it's like the end of the Bush administration there.
yeah, this is Bear Stearns. So
Oh, I
you
see.
see that Bear Stearns was a year before financial crisis. So there's the bailouts actually started here in '07, end of '07. And so what the Fed did, and it got worse in the crisis, but the Fed did was this was bailouts. So they didn't want to make their balance sheet seem so insane, and they actually had like kind of like the balance sheet was so much more reasonable at this time anyway. Like look at the balance. Let's say from here, it was
Hmm.
generally $800 billion, something like that, $800 billion at the time. And as we talked about, government debt was only 10 trillion. But there were problems in the marketplace, bad debts, socialist bailouts, all the rest. So what the Fed did was they bought all this falling here was the Fed said, okay, you take government bonds, those are still fine. People think they're fine. You take the government bonds, we'll take your bad loans and your bad books onto our books.
Mm.
And so that's why it goes down
Oh,
in
I see.
government debt percentage. You would, if you saw a corporate debt percentage here, it would shoot up like skyrocket.
Yeah,
So the
got it.
proportion of government debt shrank, the proportion of corporate debt on the balance sheet exploded like to an incredible number percentage wise. And then they leveled it out here with the other stimulus packages, all the rest. Just money printing to save Wall Street basically. But then they still had to explode the balance sheet to save the government as well after that. So the quantitative easing, the three bouts of quantitative easing you can see right here: one, two,
Hmm.
three, and most of that was done by buying both government securities and also mortgage-backed securities, and that's actually included in this percentage because those are agency securities, which is part of the national debt. It's part of that number. The 31 trillion is government agency securities. It's basically I don't know why they even do it. Other governments don't do this, but they have like you know I don't know, the farming agency or the agricultural agency, the environmental agency. They break out like the government core functions and then other agencies. They all carry the same interest rate percentage. I don't know why they do it, but anyway, it's all it's all included in these percentages, both agency and regular
Mm.
government debt, and yeah, there are even bad mortgages still to this day. Bad mortgages from 2008 that the Fed took onto their books. That's included here. The government
Mm.
owns mortgage-backed securities that were bad from 2008.
Mm.
So
So all those houses in Phoenix. What?
exactly.
But why is the? I thought QE was still going on. Like so, in the sort of decline there that starts in 15, maybe.
Yeah.
But I didn't think they stopped QE then.
They
So
did.
why is it? Why is
No,
that?
they stopped it. They stopped it.
They
This
did.
is why you got to look at charts, and this is why. Just imagine how many Bitcoiners, if you were like, I remember how many Bitcoiners were talking about money being printed during this period. They don't even look at the
Yeah.
number. They didn't understand it. The Federal Reserve was not printing money during this point. Well,
Huh.
as this black line, let's even take the percentages out because this is basically the monetary base. It's the other side of the balance sheet.
Yeah.
As I said, it's the assets, not the
Yeah.
money. But if you see here from 2014, somewhere mid 2014, if I recall, was the peak. So somewhere here. I'm already in
Mm-hmm.
2015. Maybe it was 2015. No, I don't know. It's the other side of the balance sheet. So I'm used to looking at the monetary base. Anyway, it was somewhere here, 2014, 2015. They said, all right, we're not going to keep buying government debt. We're going to try to normalize, was the word, normalize the balance sheet and stop printing money. And so they weren't printing. They literally
Hmm.
from 2014, 15, they were not printing, and they were even really trying very hard here. They had a big hiccup with the repo market here, which is a whole other story. I don't feel like
I
getting into
remember.
right
Yeah.
now, but yeah, but that was even pre-COVID, and then COVID, of course,
Yeah.
exploded it again. So they got an addiction to money printing. That's absolutely true. But if you just say all the time they just print, 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 you're not looking at the numbers because there were so many Bitcoiners
Hmm.
here that were saying, "Oh, the Bitcoin's great. Governments just print money." They actually weren't printing money at all in 2014,
Yeah. There was a
2015,
narrative
16,
that it was
17.
like 60 billion a month. Do you remember this? People were like, "Oh,
The
the Fed
six
put 60 billion a month."
that would have been this part. That would have been these increases here.
Yeah, but I've heard that this I've heard before.
The
Oh,
increases of
I
60
see.
million a month, 60 billion a month will be
60
here.
billion. Yeah.
Yeah, these smooth
Okay.
increases here. And then you
Okay.
might have heard something, I don't remember what it was, like 20 billion. I think it was 15, 20 billion. That's when they were trying to cut a month here.
Hmm.
So you might have heard that number. I don't think it was as high as 60 cutting. It could have been. Again, I'm too lazy even to do the math here, but let's just look month by month. January 844. Oh, maybe you're right. It's all over actually.
So so let me ask another question though. In the recent period, like since March of 2020, uh, obviously alarming, increase in these trends there, but the dollar strength was also
Yeah.
the trend line. You would think that there would be a weakened dollar at the same time.
This is the thing is other countries do the same thing. So it's like it's the best looking horse in the glue factory type of thing.
I
Like
haven't heard that
that's
one.
yeah, like that is the story of the dollar. And that's why they can get away with it for so long. And that's why Russia and China hate the US and they hate, you know, the policies that the US runs economically because we can get away with it. It's always been, I remember going to Russia with my choir like 15 years ago. And I remember that dollars were what we were like going with. We were going with euros. We
Yeah.
weren't going with like we didn't care about rubles. We went with dollars. And that was like 15 years ago. So
Yeah.
it's always been the dollar that's been strong in whether it's Latin America, Russia, China. Of course, is a different story. It's a complete Orwellian nightmare there, and it's pretty much renminbi there. But yeah, that's
Hmm.
that's the game. Is like, can they keep funding the deficits, keep raising the debt ceiling, but also not explode the Federal Reserve's balance sheet, not harm the dollar to a level where international investors don't trust it. And I wish I could tell you I knew the future there, but that's where it just comes back to like not financial advice, but Bitcoin's a good asset. That's how I look at it.
Yeah. Um, so why? Like I hear this sometimes about so we refinance our own debt, and if so, why don't we do it when the rates are low?
You asked me tough questions. Can we refinance our own debt? It's always refinanced. I mean, the interest rate changes all the time with bonds, so it is
But wait,
refinanced
is
all the
the
time. But
so
now,
the
now,
whatever the
now it's
current rate is?
refinanced to a bad rate. Yeah, you don't like it's
Sure,
always
but
rolled over. Old debt is rolled over with new debt because, as you
it
see, it's
is.
all yeah. Like back to the Clinton discussion, right? Like a true refinance would be all right. Like think about a credit card, right? Let's say you were in horrible financial situation. You had 10 credit cards maxed out. You didn't have a job. You were an alcoholic or like, you just had like your life was completely falling apart, right? And then let's say
I
that
feel like that's accusatory, but go on.
definitely not. Definitely not. And like, you're homeless. You had like just let's say you're in complete no bank would lend to you, right? Like no
Yeah.
credit worthiness at all. And then let's say a year later, you have a job, you actually have a really good job, you're renting, maybe you want to start buying you want to buy a house or whatever. You've paid off like 80% of the credit card debt, you've consolidated the debt. At that point, like generally in the market, right? They would say, okay, your credit now is much better. You've paid down your debt. You have a job. You have stable income. Now you're available. You're eligible for a refinance. Like that's normal market behavior, right? That's not how it
Hmm.
works. That's not how it works here. I mean, it's never paid down. This is why, again, this joke about like the austerity, sequestering, all that. Like, literally, Clinton did it, I think, 2 years, 2 full years. This is month to month, so you can't exactly see all the changes. But it was like, maybe over the course of two sets of full 12 months, the debt fell during the Clinton administration. And other than that, it's been growing. So it's not a it's not even close to a refinance. Any of the old debt, like if you held a 30-year government bond uh, in 1990, all right, you'd collect interest, and the interest would get lower and lower and worse because interest rates have been falling since 1990. So you would hate it. Actually, that's not true. You would collect the same amount of interest from the interest is fixed from
Hmm.
1990. So you'd get the same amount of interest each month. All right, but then when it came time for the government to pay you back the principal, which is the par value, basically $100 or
Hmm.
thousand, it's 100 typically with the government bond. Um, when it came time for them to pay you back that par value, they're just issuing more debt at hopefully even lower interest rates. So that's their refinance. They'll issue even more debt at hopefully lower interest rates to pay you back your initial value, and then the debt train just keeps rolling on. But now that's even
Hmm.
harder for them to do because when they want to pay back those 30-year bondholders from 1990, they got to do it with higher interest rates to new debt holders today. That's how. So they're refinancing.
Well,
They're always refinancing. Every
but
month
isn't
they
it?
refinance, but they're refinancing now in a hard way because interest rates are rising.
Yeah.
And the Federal Reserve
Yeah.
is in control of the interest rates. That's their monopolistic power. They're in control of the money printing and the interest rates. So that makes it harder on the government. So of course, you'll have all this other jokester stuff from the news that like the Fed is independent and they need to control the Fed needs to manage their independence, keep their independence. They're in charge of the dollar. They're in charge of inflation, so on and so forth. Of course, that's a complete myth too. I mean, they work hand in glove with the Treasury to make sure everybody's happy, and that's what they're trying to do. But the problem is the Treasury themselves are not responsible. So they're
Mm.
the ones that at the end of the day, they're the ones that are issuing the debt, too much debt, and it continues on. But again, back to what I said at the very beginning, uh, and I don't want to be the one answering all the questions here. I'm happy to hear your thoughts on this, but I don't think that there's going to be like a hard default. I think it's just going to continue on. Again, best looking horse in the glue factory. I'm not someone that champions like you know the whole system falling apart anyway. It's not something that I'm like a fan of. So I just think this is a lot of hot air. They're going to refinance. They're going to refinance at higher rates. It's going to be tough. It's going to be definitely tough this time. And that's why I'm not a fan of holding like just pure dollars long term. But, you know, I don't know. We'll see.
Yeah, I think that's an important statement, right? you can both be a Bitcoiner and not be rooting for the demise of the current um, financial infrastructure, because that's not going to be good for anyone. Even if you're sitting on Bitcoin and that suddenly goes up in value, a financial collapse is bad, right? So, um, and it's particularly bad for the incumbents, right?
Yeah.
And so I can see why the challengers, and I guess my question to you is like, how vulnerable is the dollar as a reserve currency? Like, you see these kind of basket of commodities ideas, or settlement of oil and yuan, that right now look like drop in the bucket compared to the dollar and the euro dollars distribution. But can you chip away at it? Is this an imminent threat? What do you think?
Well, as you said, the dollar got stronger over the last like 18 months. It's falling back now. It's falling back. Euro's regaining ground, the yen, Swiss franc. So um, I think it's got a while to go. But again, I just don't know, man, if it's going to be like. In fact, I've always said this. This is something I feel pretty strongly about. Like, if you were a gold bug in 1970, you would have thought like, you'd won in 1980 when gold was $850 an ounce for 2 seconds. That was literally all it was 2 seconds on the world markets. Everybody quotes $850 as like this great high of gold in 1980. It was $2. It's 2 cents. It was 2 seconds at $850 an ounce. And anyway, from there it went into a 20-year bear. And of course, there were other things that play there. There was, as you said, interest rates got cheaper, stock market grew. It's just a new market structure, all the rest. Um, so like if you were just dogmatic as a gold investor, like you wouldn't have really been happy with your portfolio from 1980 to 2000. I think it's got to be the same like balanced look today. Like I do think Bitcoin's not going to follow these same long-term trajectories there, like these long-term bulls and bears, because it's digital. It's it can be used by everybody in the world. It's completely different than gold and silver and monetary stores of value. It's just completely different. But nonetheless, I think that, you know, expecting all of these currencies to just like, everybody always likes to harp on the dollar as being like the real danger, the danger currency, like the thing to be really worried about. But again, you go to Argentina, Brazil, Japan, like maybe Switzerland. Okay, Switzerland is typically a little bit better. It's in fact definitely always better than the dollar. So Switzerland, Swiss franc. But other than that, um, I mean, China, like you want to, park assets in China right now. Japan, you can't really do that without speaking Japanese. Like you have to, like that's just such a closed culture. So it's not in Russia. I mean, you want to buy rubles. So like, I don't buy this argument that the dollar is going to zero. Like I said, and that's the same. I think what's his name? Jeff Snyder calls it the dollar milkshake theory. Like it's the same thing. Is what has been said for years about the dollar. Best looking horse in the glue factory. However it shakes out in the end, I'm sure the dollar will still be fine at relative to some level uh, of purchasing power compared to other currencies after 5-10 years. Like this is what George Selgin, great economist, said on our first interview with him. He's like, fiat currencies, they are stores of value. They're just not necessarily very good. So I do think it's a lot of like bluster, and yeah, I just think of talking heads on cable news, like people that you would never want to listen to for financial advice or any advice really. Um, if you actually look at the numbers, and even Bitcoiners can do this, right? Like they were trying to stabilize the dollar here in 2014-15. Of course, they didn't, and we're all bullish on Bitcoin here. But um, I don't know. I don't want to go on too many tangents there, but I hopefully answered your question in just the fact that
Yeah.
I don't necessarily champion the dollar going to zero, and I don't think it's going to happen. I mean, there's just too much at stake. Uh, I mean, look at this. Let's put this on log scale. Let's put this on log scale. Like this, you can see. Let's take the percentages off. Let's even take this off. So, $3 billion in 1915 30, 31 trillion in 2022. Uh, this dollar has gone through many different things. It's been gold backed. Before that, it was silver backed. And then it's been purely fiat backed since 1971. Like, will it be Bitcoin backed in the future? Will something else happen? Will it be gold backed again? Many, many things can happen. But you know, again, I just don't see the burn it all down mentality or whatever. Uh, Maybe I'm just getting too old, but I just don't think that it's that interesting, and it's certainly not something to like lay up, lay awake at night and think about all the time. I'm not saying that everything is great. Definitely not saying that at all. Like, plan accordingly, diversify all the rest. But I just don't. I don't know. I'm probably beating a dead horse at this time, but I don't think that it's. They're going to refinance the debt. They are going to pay higher interest at the moment. That's definitely going to be tough for them. And the Federal Reserve is going to have to decide if they want to go back up here. Remember, this is log scale, but
Yeah.
it's a lot of money that the Fed owns of taxpayer money right now, which could damage the dollar. But again, compared to all the other currencies.
Yeah. No, I mean the dollar is at like, or the euro is at 1.09 or so, I think right now, which is up. It got down to like almost even, or it did get to
It
even,
was
I
parity,
think.
yeah. It
But
was.
yeah, it was for a second. But compared to the last like 36 months, it's still really strong. So, we haven't even like gotten back to kind of that pre-COVID levels of dollar weakness,
Right. Like buck
which
buck
is
20, buck
incredible,
30
right?
euro. Yeah, buck 20, buck 30
Oh, for
euro.
sure.
Yeah.
It was even higher than that for a while.
Back in
Like I
the
thought it was a
mid 2000s, it
140,
was it was 160 in late
160.
2000s.
Yeah.
Yeah.
Yeah. Um, all those Americans looking to go on their honeymoons in Europe were really suffering.
Yeah.
So unfair. So I have another question that I think is somewhat related that I've actually never really understood well, which is, and the Japanese central bank is always held up as like the exemplar of this. It's probably the wrong word, but when central banks buy securities, so what is the role of central bank buying like securities, and where does that play into the assets and liabilities?
So, yeah, let's take this off and just show this. So, to your question about foreign governments holding debt, it's typically just foreign central banks, you say, which is basically a foreign government, but it's on the central bank's balance sheet of a foreign country. So this is the United States. So in green, again, we have our debt that we owe everybody. We all owe all sorts of creditors. The biggest whale, the biggest single whale, is our own central bank, which is kind of weird. It's kind of hard to conceptualize, understand, but you basically have to think about the strength of the dollar at this point, because the way that we buy this is by devaluing our own currency. That's what you have to think about. So we are the biggest whale ourselves, our own money printer, and it's 30% of the debt. Okay. And it is, as of last year, now it's down to 8 trillion, but it was as high as 8.5 trillion. I don't have the number, the very latest number on the top of my head, but it's somewhere around foreign creditors to the United States, that is, foreigners that own a portion of this green pie here, the green level.
Mm-hmm.
It's about another 7.5 trillion, maybe 8 trillion. So it's like a little less than a third, right? We're basically a
Wait,
third here. Yep.
hold on. So we own a third, foreign creditors own a third. Where's the rest?
Like pension funds.
Oh,
Yeah,
the market.
yeah. The
Yeah.
market. I mean, it could be foreign. I'm talking about foreign governments when I say a third there.
Yeah. Okay. Got it. Got it.
So
Yeah.
like foreign official, it's called, like a foreign official government. So the PBOC, People's Bank of China, Bank of Japan,
Yeah. Got
so
it.
on and so forth. So yeah, so the Fed is the central bank, the big one, the local one that owns a third, roughly a little less than a third. Uh, Japan, China, all of them. I think Japan and China might have a trillion each of that 7, 8. So that's two. Europe
Mm.
probably has at least a trillion, probably more. We can do another show on that too. I can get those numbers. But yeah. So then they start to wonder, like, look, you're having too much debt. The dollar's being devalued. I want to be paying in dollars, or the interest rate isn't good, so on and so forth. But this is actually the thing that's good for creditors. If you can get it at a good interest rate, if you can get it in a good interest rate the first time, and then the rates start to fall, then the value of the bond will go up, and you could even sell it on the open market for like double, as I mentioned before.
Mm.
But if the rates are going up, remember, price moves opposite with the yield in bonds. So if the yield goes up, as it's doing now, as they're raising interest rates to protect the dollar, the price of the bonds is falling, and that's not good for creditors on the open market. On the flip side, they get more interest. They get more interest if they keep it as rates go up. But the actual capital value it's a massive hit once rates start going up for them. So it's all a game about capital values, the coupon, the interest, all the rest. And I think this is the most interesting thing that shows like the value of the dollars, because look, you see, like, the Fed, as the Fed likes to say, Fed apologists, like they were just practicing here. They didn't have much. They actually had a lot of corporate debt that the Fed held back in these early days. Very, very little government debt, 2%, whatever. Then they took on more during the Great Depression, and then, as we talked about, the war, and then really built up here in the Vietnam days. But other than that, we've never seen what we've seen here. Like, this is beyond anything World War II. This is a way different chart than debt to GDP sort of ratio. Like, it doesn't look good for the dollar when you have to just keep printing money to finance the government itself, your own government. Like, that doesn't look good for the dollar. So that's the main chatter in the financial press and stuff about why creditors are not happy with the U.S. government debt and the debt ceiling and all that stuff.
Yeah. Interesting.
I think that's probably all I wanted to say about this. We did a lot of good tangents.
It was helpful to me as the non-economist. I don't know if the listeners know that I'm not an economist. I just want to throw that out.
Well, they should know I'm not one either. Just economic observer or something.
Yeah, that's really not fair. No, this is great, and I know you've been doing a lot on the dailies now that the video element is up and running. So tons of chart information here.
Well, hopefully people like it. Definitely let us know if you want us to chart other things like this. When are we going to get some Halo privacy stock value up here?
Stock value.
Yeah, capitalization. You guys are a private company, but still,
We're private.
You wouldn't want to see it anyway
options
on this podcast. That's for sure.
Not yet. We're going to play it close to the vest, and we'll reveal financial information once we've cooked the books enough. No, I've got my Halo swag on today. We were talking about before the show. Halo's not a big Super Bowl ad company. It turns out, as a privacy company. But we got this hat this year, and I actually really like it. So shout out to the swag team. It's solid. Really good.
Very nice.
And it's scarce. There's not many, so therefore it must be worth something.
There you go, my friend. I like it.
Yeah. Anything else cooking in the Porkopolis world?
Nope. Just continuing on. We're doing the gold, silver stuff. Probably we'll get to some more macro, regular economic stuff in the coming weeks. But check out the latest power regression ones if you want. 96% R squared for Bitcoin's price, doing a regression trend line on a power curve. So it's a pretty amazing goodness of fit. And as I think I mentioned pre-show, like that dip that we had in January, end of December, was actually like a 2 sigma down move. So it was a very, very rare move, like outside 95% of the observations actually interestingly held as kind of a nice level of support. Even though I'm not like a chartist trader type thing, this is just a regular statistical formula. So it seemed to be an interesting little bump off of that level. Again, no idea
Hmm.
where it's going to go in the future, but it seemed to be a
Um,
historic low.
yeah, people sentiment seems to be a little bit bullish. So, did you see the jobs print? It just came out while we've been chatting.
I did not.
517,000. So, um,
More than
you
expected,
know,
I presume.
yeah, significantly more.
Yeah.
Um, I mean, I guess all those people that were kind of living on the COVID stimulus decided to seek out employment. Um, Either that or it's the work from home engineer that has 9 jobs just added their 10th.
Yeah.
So
I have
that
trouble with
that could be
those
contributing.
employment numbers as well. It's like those going into all that. It's like the people that are like part time or the people that are seeking other employment. Are they counting them accurately? It's all those age old questions. But um,
Yeah. But I mean, the headline will be, jobs print is exceeds expectations, Fed likely to increase hikes, right?
yeah, yeah,
That's that's how the public will see it.
yeah,
And that's probably what'll happen, right?
absolutely. And from a perspective about the strength of the currency, theoretically, yeah. If I did see that people were tracking how many times he said the word disinflation in the presser
Mm,
this week, which is basically a decrease in the rate of inflation, which would be
yeah.
something that would then further signal that they wouldn't keep increasing maybe beyond uh, the next hike, the next meeting, which it then would be further
Uh,
bullish for the markets and all the rest because people are just addicted to more cheap credit. So
can I do my privacy PSA?
definitely, definitely do it.
We got to get out there. I haven't been up on the soapbox yet at all this show.
I've been way too
So,
much on it. So yes, please, please, please.
oh no, I just mean my ranting about the degradation of our privacy. So this is a U.S. based story, but the FTC, the Federal Trade Commission, I'll send you the link for show notes. So they announced yesterday a whopping $1.5 million fine against a online prescription company called GoodRx. So you get a prescription from your doctor here, and instead of going to the pharmacy, you go to GoodRx, and they'll help source the best price for your goods, and they'll ship it to you, right? So it's a good capitalist way of getting your prescriptions. Uh, it turns out they're offsetting prescription costs by reselling your sensitive health information to the likes of Facebook and Google. And so, why are they interested in that? Right. Well, first of all, for advertising purposes, but second of all, there's something called this health profile. And so, a data broker and Facebook and Google are themselves data brokers, and then there are companies that are standalone data brokers like Axiom and Radaris and Intellius, and there's 525 of them in the U.S. right now. And so one of the 1,000 to 2,000 or so categories on a person in a data broker database is health profile. And that has subcategories too. So there's other categories like, political, demographics around where you live and what they think you make. And all of those things are categories. But the health profile category is particularly interesting because health insurance companies will make, at a minimum, market-based decisions. So they'll look at like a town or a zip code and look at the health profile there. But it can get pretty granular. And so the concern is, right, if people know what prescriptions that you're on, and then you go to seek healthcare on the open market, and that health profile information is available, then there's an obvious incentive to discriminate against people who have a higher likelihood of not being of being a liability to the insurance company,
Mm-hmm.
right? This is just one example of it.
Yeah.
The other more kind of like tangible ones are, hey, I got a prescription for something that is personal and private, right? And now Facebook and Google can target me for ads related to that. So This is kind of a dark side of advertising, and we were talking about before the show. I personally find it frustrating when people say, "Oh, I'm not that interesting," right? Like it's just Nike selling me sneakers, and sometimes it's really great to get these targeted ads because I see these products that I am interested in. How amazing is that they know what I'm interested in? Cool, that's your decision, right? If you think that that's appealing. However, everyone should be concerned about this kind of like very sensitive personal information being collected, being resold, and illegally, it turns out. And then the disincentive here, a $1.5 million civil penalty, is nothing. Nothing. I would love to know how much they earned on that data. But this is not even discouraging someone in the corporate world from doing it. They will consider this cost of doing business. I guarantee it. So if you're out there, right, what's the hedge? You may not want to use these online marketed tools for personal health purchases. It's not that much better, though. Your alternatives aren't great, right? Like, because if you still go into the CVS or the Walgreens or whatever your pharmacy is locally, and you swipe your MasterCard or your Amex, right? Like that's another data point of collection. So you're probably being collected on regardless. What I would suggest to people is, at a minimum, with your credit card, you can opt out of their ability to resell that information. And so in this case, this was sold by GoodRx without the consent or permission or without legal authority and without the consent of the consumer. You can opt out on your credit cards. So there you go. That's your privacy minute.
Two questions. First of all, how good of a job do you think that the justice system generally does in protecting privacy? Is it like even high up on their priority list, or based on this fine, it sounds like it's probably not.
Um, so uh, Philosophically, I don't find that compliance requirements are really strong um, deterrence against economic activity. So compliance just becomes something that you go through a box checking
Mm-hmm.
ceremony on, and you hire a chief compliance officer and some mid level compliance people, and you figure out what you can and can't do within that regime, and then you kind of like work the margins, right? That's just how compliance works. It works that way in the financial industry too. So yeah, I think the trend is towards more privacy mandates and more privacy compliance, and that's, I guess, okay. From the sense of it, maybe it protects the consumer. It just creates more like administrative sprawl, which has a whole other sort of detriment.
Mm-hmm.
But the the real kind of like the real way that a consumer wins here is by taking some responsibility themselves, right? Like, just don't assume that GDPR solved your
Yeah.
privacy problems. Don't assume that the CCPA, which is the California version of GDPR, really did much. It wasn't bad, right? And this, I think there was some good intent there, but the government's not going to solve your privacy problems. Sorry to
Yeah.
say.
And then the second question, like this has nothing to do even with the act of paying, right? This is more on the pharmacy side that I understand. So like if you paid cash here, you still wouldn't even had your problem solved, or you would
So,
for
well,
for
GoodRx
the medicine.
is online only. But if you got a prescription from your doctor and walked it down to the
As far as your
CVS and
solution
paid
though,
cash
yeah,
for,
yeah, yeah. Sorry, go ahead.
yeah. So, okay. Like, the best thing you could do, right, is you would go get your prescription, walk down to the like locally owned pharmacy and pay in cash, right? I don't know how many people are doing that, and it's way more convenient to go to the CVS, right? And the CVS wants you to use your CVS discount card, and they want you to
Right.
be in their system so they can send you reminders, and that's just the way that works. And at a minimum, even if they're not reselling information elsewhere, they're using that information themselves, right, to target you as a customer. That's for sure happening.
Yeah. So it's tough.
Yeah, it's tough. You have to be weird, right? If you want, you just have. I mean, you and I are both weird, right? But like, if you want to accrue some privacy, I know you will deal with a lot of friction in your life, as will I.
Yeah.
But the reality for a lot of people is, even if they wanted to, they don't even know, where to seek that friction, and what their exchange is for it. Um, it's demoralizing.
Yeah, it is indeed. And we talked about. I sent you the tweet from Seth for privacy. The Delta
Mm-hmm.
face scans. I mean, it's just snowballing.
Oh
It's
yeah.
it's completely snowballing. I don't I don't see a way. I've never done a TSA body scan. First, there was like principle. Then it was just like I don't know. Maybe it was health, and I guess the health it's probably not really a big deal. But uh, as they always like to say, oh, there's more radiation in the planes than actually on these scanners. But regardless, like that was an initial concern, like way back, like 10 years, because they just started doing it 10 years ago out of like just out of the blue. TSA was doing all the scans,
Yeah.
so I always opted out. I still remember like there were funny things, like even I mean more funny, maybe not so principled. Like I remember stories of like girls would go through like security like with bikinis and have like the Fifth Amendment on their on their
I
skin
haven't
or
seen that one,
whatever.
but
And like yeah, well there were just these did I get that right? Is it Fourth Amendment? Fifth Amendment? Regardless. Fourth Amendment, I think. Regardless, you know, there were there was it seemed like there was some a little bit of pushback like 10 years ago, and then it's just like, okay, everybody just does the scanner. I don't live in the US, so I can opt out pretty easily every time I'm there. Like it's not a huge hassle for me. But and Europe doesn't have that. And I just feel like going through these airports, like they're already frustrating enough from privacy and personal, just personal privacy sort of side. Um, but that I just don't see how you even get out of that. If they're theoretically you can opt out and not use that facial recognition scanner from Delta, he was saying, but most of the time
yeah.
they don't want you to. I mean,
Well, with Delta you can.
yeah,
Other
but
airlines, like if you're flying a Chinese airline, you can't opt out of it.
yeah, but
So
even
I
with
mean,
Delta, he
I
was saying
have
like with Delta. I mean, I haven't paid attention to this. I haven't been flying in the U.S. recently, but he was saying like the flight attendants or the check people checking in were just
yeah.
totally not wanting to get out the physical scanner or whatever, like not wanting to do it, like just totally wanting to do it. And how did they even get the original initial facial recognition in the first place? Because there was no like where were they pulling that from? Like Facebook or something? I mean, there was no like original. It wasn't
Yeah.
like global entry where you had to go in for an appointment and you know take a picture and do your thumbprints, which by itself is absurd.
Um, yeah. Yeah. I mean, who knows? They may have bought it. I think you were the one that threw out like Clearview AI as the kind of boogeyman that has the most data. At least I don't know about any kind of like Chinese companies that have more, but in the Western world, Clearview AI is the one that supposedly has the most facial recognition data, and they're pretty insidious about it.
Yeah.
Um, and airports in general are like privacy free zones, right? Like you can be searched anywhere at an airport anytime, basically, and you have to go through their screening. Like you may have like 1% on the margins of latitude, and it depends on where you are, right? I don't know when the last time you flew through Heathrow is, but Heathrow feels like sort of like a dys- dystopian like surveillance state with the kind of like scans that you just walk through that you don't even have to like have you seen it, right? You don't even have to go
I haven't,
through.
but yeah, not looking forward to it.
Yeah, it's just like a
London,
persistent scan zone.
yeah,
Yeah,
UK,
that's what it is.
London.
It's a persistently scanned zone.
Yeah, yeah,
Yeah.
I got it. And walking around London is the same. I mean, CCTV and
Yeah,
it's
everywhere.
so it's just snowballing, man. I don't see how you preserve any privacy in public, at least to the extent that there's always going to be some ID, like the facial recognition. Maybe it's not going to be as bad as China, but it's coming. There's going to be some ID attached to your face from the government side, like very soon in public. It seems.
Yeah, well, I'll just maybe I'll end on this comment, but um, you and I are both of the age that in let's say 2000, in the early 2000s, I could go to a bar in the US and you just present an ID and they kind of look at your face and they're like, yeah, right, right. It seems like it looks like you, right? That was
Yeah.
the facial recognition of 20 years ago. So I don't know what's happening for the people who are just slightly under 21 here in the US, but I bet it's getting harder. And I have seen these services where it's a ID scan that the bars use that then like puts you in a database that then bars share amongst themselves. And it's for marketing purposes. So like, oh, this guy always gets bottle service and drops 5K every time he's in here. Or that guy has been kicked out of 2 other bars in Miami, right? So we don't want to let him into, like, you suddenly are kind of PNG'd from all the establishments that use that. And I'm like, that's not cool, right? I mean, my kind of like bottle service club days, not that they really were much of a time, are behind me, but I don't like that at all, because that's just like pure capitalist surveillance.
Yeah, yeah. In the name of personal, in the name of like personal preference, that they're going to cater to you. Really, what they're doing is, unfortunately, being able to censor. And that story's been out as well, though. I remember back in my days when I was reading more hardcore newsletters, like people were all freaking out about the grocery cards, basically any card that is attached to your name. It's going to track your personal preferences of a
Mm-hmm.
broad array of things like grocery shopping. Certainly, the trend has been going on for like 20 plus years, and it's not. I don't know. I don't. You you're the one working on those solutions, not me. So I'm all ears about how to keep preventing those things. To yes, the Fourth Amendment, not the Fifth. The Fifth is what Trump was doing all the time in his last deposition. But the Fourth Amendment is what they were going through, the
That's
body
the
cameras.
seizure.
Yeah, unreasonable search and seizure back in the day. But I haven't seen anybody
Yeah.
really care about that stuff lately.
Uh, I mean, in the like weird corners that we hang out with, people do.
Yeah.
I'll just say one thing about grocery store discount cards.
Mm.
So a lot of people in the privacy world are aware of this guy named Mike Basil, who has a podcast and some books, and he's a real like privacy enthusiast, and his content is fantastic. But he started this. He does this himself and encourages his listeners to, in your kind of like local town, if you're going to set up a grocery store discount card, obviously don't give them any of your personal information, and there's this famous like Tommy Two-Tone song from the 80s that's 867-5309, sort of famous like phone number in that song. And so what he says is just use your local area code and then the number 867-5309. And if enough people do that, when you travel somewhere and you're in a different state and you want to get the grocery store discount, you just put in the local area code and 867-5309. And if someone else there created that account, then you can get your discount on your bananas.
I think I remember you saying
I
that.
think that's
Yeah,
great.
that is a
Yeah, I thought that
that's a
was
good
awesome.
hack. I like that.
And I think shines a light on a song that deserves some
Yeah,
glory.
yeah. Too right, man. Too right. We've been talking about the '70s and the '80s enough here on these charts, so we got to get some real world examples. But
Yeah, I love it.
good, man. Good stuff. Well, thanks for checking in for this. That's the government debt ceiling. We'll see what happens this year. That's the big bugaboo. Don't watch cable news. Look at the numbers and stay safe, stay private, best you can.
Love it. Thanks for including me in the video episode.
Good, man. Well, have a good weekend, and look forward to talking to you soon.
Likewise.